Hello, my name is Milfred, and for this presentation, I'll be presenting topic related to auditors' responsibilities relating to fraud with regards to misstatements in the financial statements. It can arise from fraud or error. The distinguishing factor between fraud and error is whether the underlying action that results in the management of the financial statements is intentional or unintentional. Fraud is intentional or deliberate action of a person or management to create misstatements in the financial statements, or may cause the financial statements to have misstatements. While error will be, of course, unintentional actions or events incurred by the company. There will be two types of fraud. The first one is misstatements resulting from fraudulent financial reporting, and the second one is misstatements resulting from misappropriation of assets. Although the auditor may suspect or, in rare cases, identify the occurrence of fraud, the auditor does not make legal determination of whether fraud has actually occurred. And as an external auditor, we are not highly specialized in detecting fraud. Though, as the course of the audit goes, you will have the chance to see red flags that might cause fraud. We do not have a responsibility to take legal actions with regards to fraud. As an auditor, we can only refer this case to management, and if the fraud or possible fraud is affecting the presentation of financial statements, or it incurs misstatements, maybe from fraudulent financial reporting or misappropriation of assets, then we'll have to report it to management or governance on a timely basis. Our primary responsibility as an auditor is to obtain reasonable assurance that the financial statement as a whole are free from material misstatements, while the management and governance will have the primary responsibility for preventing and detecting fraud. So it's really important for the management to set up a strong control to reduce the opportunities or pressures, and even avoiding radical attitude towards fraud. Key terms that we have to be mindful of when we say fraud, as I mentioned in the previous slide, it is an intentional act of one or more individuals among management, those charged with governance, employees, or third parties, involving the use of deception to obtain an unjust or illegal advantage. Fraud risk factors, those are indicators that fraud might be happening. With regards to management and others within the entity, on risk assessment, the auditor shall make inquiries of management regarding management's assessment of the risk that the financial statements may be materially misstated due to fraud, which would include the nature, extent, and frequency of such assessment. And also, they have to identify and respond to the risk of fraud in the entity, whether it affects the class or classes of transaction, account balances, or disclosures. Also, the management has to communicate, if any, to those charged with governance, particular items or events that may be having risk of fraud. And also, they have to communicate to employees regarding its views on business practices and ethical behavior. For those in charge of governance, unless all of those charged with governance are involved in managing the entity, the auditor shall obtain an understanding of how those charged with governance exercise oversight of management's processes for identifying and responding to the risk of fraud. Also, the auditor shall make inquiries of those charged with governance to determine whether they have knowledge of any actual, suspected, or alleged fraud affecting the entity. These inquiries are made in part to corroborate the responses to the inquiries of the management. The auditor shall evaluate whether unusual or unexpected relationships that have been identified in performing analytical procedures may indicate risk of material misstatements due to fraud. Also, the auditor shall consider whether other information obtained by the auditor indicates risk of material misstatement due to fraud. The auditor shall evaluate whether the information obtained from other risk assessment procedures and related activities performed indicates that one or more fraud risk factors are present. While fraud risk factor may not necessarily indicate the existence of fraud, they have often been present in circumstances where frauds have occurred and therefore may indicate risk of material misstatements due to fraud. The auditor shall determine overall responses to address the assessed risk of material misstatement due to fraud at the financial statement level. So which means when we assess the risk of material misstatement due to fraud, we have to check whether it affects the financial statement assertions. The auditor shall identify and assess the risk of material misstatements due to fraud at the financial statement level and at the assertion level of the classes of transaction, account balances, and disclosures. Assign and supervise personnel taking account of the knowledge, skills, and ability of the individuals to be given significant engagement responsibilities and the auditor's assessment of risk of material misstatements due to fraud for the engagement. Evaluate whether the selection and application of accounting policies by the entity, particularly those related to subjective measurement and complex transactions, may be indicative of fraudulent financial reporting resulting from management's effort to manage earnings and incorporate an element of unpredictability in the selection of nature, timing, and extent of audit procedures. Audit procedures responsive to assess risk of material misstatement due to fraud at a certain level. The audit procedure should be responsive to what we had assessed during our risk assessment process. Irrespective of auditor's assessment of risk of management override of controls, the auditor shall design and perform audit procedures to test the appropriateness of journal entries recorded in the general ledger and other adjustments made in the preparation of financial statements, review accounting statements, biases, and evaluate whether the circumstances producing the bias, if any, represent the risk of material misstatements due to fraud. For significant accounts or transactions that are outside the normal course of the business for the entity, or that otherwise appear to be unusual given the auditor's understanding of the entity and its environment, and other information obtained during the audit, the auditor shall evaluate whether the business rationale of the transaction suggests that they may have been entered into engagement in fraudulent financial reporting or to conceal misappropriation of assets. When we evaluate evidences using when we evaluate the financial statements using analytical procedures near at the year end or near the end of the audit, and also when we are forming an overall conclusion to the financial statements, indicate a previously unrecognized risk of material misstatements due to fraud. If auditor identifies misstatements, then the auditor shall evaluate whether such misstatements is indicative of fraud. If the auditor identifies misstatements, whether material or not, and the auditor has a reason to believe that there is or may be the result, auditor has the reason to believe that it is or may be the result of fraud, and that management is involved, the auditor shall reevaluate the assessment of risk of material misstatements due to fraud, its impact on nature, timing, and extent of audit procedures. The auditor shall also consider whether circumstances or conditions indicate possible collusion involving employees, management, or third parties when reconsidering the reliability of evidence previously obtained. If the auditor confirms or is unable to conclude whether the financial statements are materially misstated as a result of fraud, the auditor shall evaluate the implication for the audit. If fraud is or indication of fraud is affecting the assertion level and the financial statement level or the presentation, we have to see whether we need to modify our audit opinion. The auditor shall obtain a written representation from management and those charged with governance that the latter acknowledge the responsibilities in designing, implementing, and maintaining internal control to prevent and detect fraud, disclosure of their own assessment of risk of fraud, and disclosure of any allegation affecting FS communicated by employees, former employees, analysts, regulators, or others. Okay, if it happens that auditor has identified a fraud or has obtained information that indicates that the fraud may exist, the auditor shall communicate these matters on a timely basis to appropriate management in order to inform those with primary responsibility for the prevention and detection of fraud of matters relevant to their responsibilities. If the auditor has identified or suspects a fraud, the auditor shall determine whether there is a responsibility to report the occurrence or suspicion to a party outside the entity. Although the auditor's professional duty to maintain the confidentiality of the client information may preclude such reporting, the auditor's legal responsibilities may override the duty of confidentiality in some circumstances. With regards to documentation, the auditor shall include in the following audit documentation of the auditor's understanding and its environment and the assessment of risk of material misstatements required by ISA 315. Significant decision reached by the engagement team regarding susceptibility of risk of material misstatement due to fraud, identified risk of material misstatement at assertion level. So these are included in the documentations to be made by auditor. The auditor shall include the following in the audit documentation of the auditor's response to the assessed risk of material misstatements required by ISA 330. The overall responses to the assessed risk of material misstatements due to fraud at the financial statements level, the result of audit procedures, which of course includes those designed to address risk of material, including those designed to address the risk of management override of controls. Now, we have what we call fraud triangle or fraud risk triangle. These are major classification of fraud risk. The first one is incentive or pressure. This actually creates certain pressure to an individual or the management to either perform better with disregard to the control. And also it provides incentive for those who had exceeded the expectation of the company. So when we have this incentives and pressure to commit fraud, we have to look into the factors such as financial stability or profitability. If the incentives or let us say bonus provided to employees will be based on profitability, it might be an indication of risk, maybe because of pressure from management or of course incentive that they will receive if they exceeded the expectation or financial goals. In that case, they may disregard the existing control. Opportunity to commit fraud is where the business operation itself and or internal control is giving the opportunity or chance for a person to commit fraud. So most of the time it will be focusing on the controls implemented by company. If the controls are not strong or there is no control in place, this might be subject to abuse and may create fraud. With regards to attitude and rationalization, it talks about the ethical standards and values implemented and exercised by the company. So those person on top, they are the one leading the company. And if their interpretation of controls and risk management, shall we say, are not really that important, it may again come down to the bottom level of the organization, and the staff level will say, this is not our focus, this is not our priority. Okay, so when we talk about controls. So in that way, the management or even employees will rationalize their act because it's not really given importance. So these are fraud triangle or fraud risk triangle. These are only indications that fraud might be happening. It is not right to say that if there will be financial incentives for high performers, fraud will be happening. It is only an indication that fraud might be happening. So which means you still have to do extensive tests to determine whether the risk of to determine whether the fraud has been incurred. You can see this in ISA 240, extensive list of fraud risk triangle. And that's it for fraud and going concern topics for audit. Our references will be ISA 240, the auditor's responsibility relating to fraud in an audit of financial statements, and also ISA 570, going concern. Thank you.